Joining us now, Sylvia Jablonski, Defiance ETFs co-founder and CEO, and we were talking about some of the positive action we've seen in the stock market in the last week and a half or so, which maybe calmed some of the fears that we did have earlier about whether we wouldn't have a Santa Claus rally. In fact, a lot of people said what we normally see in September and October, we were seeing in November. Some of the, we see a lot of lows set in October. I want to start with you with something you said. I thought it was nice. But here's the Wall Street Journal: American consumers sour on the economy. You say for the first time in a while, consumer sentiment went up, and that's one of your positives. So I said, well, how can that be when this is in the article? Okay, so University of Michigan has been doing this since the middle of the 20th century. The all-time low. And it's a number that can be anywhere from 50, 60, 70, something like that. The all-time low was 50 back in 2022.
Yes.
Last month it was 51. This month it's up to 53. Yes. So that's your better consumer sentiment, right off a historic low that happened. That was right after Ukraine was invaded by Russia. So it's sort of like bouncing around the bottom. There are problems with consumer sentiment, are there not?
It's bouncing around the bottom, but it did move a little bit.
Moved a little higher.
It moved a little bit higher.
Before Christmas.
It moved a little bit higher before Christmas. We saw the dip buyers come back in. You know, a lot of what I think about is gauging what happens in the market when we get these pullbacks. Is there utter panic, and do people kind of run for the hills and sell all of their positions? And is it prolonged? Or do we see a short-term pullback in broad-based indices, and do we see investors coming back in? And I think when we see investors coming back in and you start to see broad-based rallies in the S&P 500, which we did see during those bottoms over the last couple of weeks, I think that the investor is becoming a little bit more positive on the market. The broader-based surveys, yes, they are near historical lows. They bounced up a little bit, but I do think that there's a positive outlook for the future in terms of wage growth for middle and upper-class Americans. Inflation is softish. Jobs are softish. Earnings are good. I think that overall there's a stable view of the economy and where we're going.
The one caveat for the journal's piece was but spending continues. So they point out all this, but people are doing things differently than what they're saying. The other thing in the article, it totally is split down party lines. Republicans feel much better about what's going on. Democrats think, it's the end of the world in terms of the economy right now. So that's probably not that surprising. But it's a K-shaped economy we keep talking about. So the high net worth, or not high net worth, but people that are doing a little bit better are spending more. People that aren't doing as well are not. But you see the dollar store ETFs. So they're finding a place to spend it. They're just very value conscious right now, but they're still spending.
Yeah, and they are spending, and I think that that's also a sign that we have a pretty decent and strong base within the economy here, right? And I think that the minute, and to your point, a lot of times what they say and what they do is completely different. So I also take those sentiments with a grain of salt, because you'll see that. You'll see, lower confidence numbers or like a slight pickup, but then you see a big change in spending. Holiday spending, seasonality is on our side right now. So I think that as long as we continue to see a strong consumer spending, and jobs don't fall off of a cliff, you have that stability there.
So everything sounds pretty sanguine with you. Some of your long-term concerns are that the Fed could be making a policy mistake in terms of inflation. You think there will be cuts? Is that the wrong thing to do, or you're not sure?
Well, I just think that they've made mistakes before. So we need to see. I think that there's a fine balance here, right? The market expects a cut. The market expects at least a couple of cuts next year. And I think that if there's any kind of divergence from that, or if they go too fast one way or not fast enough the other way, there's impacts to the economy there. So the market is very, very tied to what the Fed is doing again. We talked about this last time I was here. We talked so much about how everything in the markets is revolving around tariffs, and that's the obsession of people. We started almost talking about the Fed a little bit less, and now it's back to the Fed. So I just think that any policy misstep or shakeup from what the market expecks leads to volatility.
And AI continues to lead.
Yeah, AI continues to lead.
And that's good. That's okay.
I think that's okay. I think that's good. You're talking about a $300 billion market cap. It's projected by 2033 to be in the trillions, a 9x growth, 30% compounded annual growth rate. The energy behind it is set to grow 8x from where it is now. Right now, it's at about $60 billion. So once this starts getting integrated into the different sectors in the S&P 500, kind of beyond the ChatGPT story. I really think that this is a thematic play that investors
so
are
we'll
going to
hit
keep
new
watching.
highs and even further new highs next year, in your view?
I think further new highs next year, barring any major geopolitical issue, tariff crisis, which we've seen these things happen, right? So
Right.
They're not impossible, but I do think that the market is set up to continue to run.
Okay.